Hello traders, Mr. Pip here. I'm making this video on November for the chart on November 13th in question. My question was posted by one of our traders. Right here we have confirmation for going short in this area, and there almost always is some sort of confirmation, especially when price reacts this sharply. Okay, there usually is some technical reason why that happens. We're going to look for that here. The very first thing you want to assess are significant areas of supply and demand. Okay, and we do that for a couple of reasons. One, they are barriers that price must either accept or reject. So those are areas that are important because decisions are being made in these areas. They are the ones that hold the best confluence zones and also the best trading opportunities. Okay, so we want to identify those. I do this visually on my chart. I don't draw these in my trading. I draw them for your benefit. So we're going to go ahead and draw those now. I'm going to condense this chart a little bit and look further back and see that we have an area here that we want to identify. We'll use our rectangle tool here, and we're going to go from here and bring that across, and we see that we have price reacted rather harshly to these. On the incline, price rejected it lightly, failed to accept again, did a double top and rejected it pretty sharply. Then there was another sharp increase in price acceleration, never quite made it here, and then it also pulled back away from it pretty dramatically, and then price lost its momentum to that zone again, rejected it here, tested it once again, another sharp rejection here. So we can fairly say with a high degree of certainty that price is going to have a pretty dramatic reaction to the zone in the future. Why? Because history has shown us that price has reacted harshly to this level. It's had difficulty accepting this level. There's also a round number here, minor round number, 134.50. We can put a line on that if we want as well, just so you can see how confluence plays a role in all this. We'll make it fatter here, and we see that we have an area of supply and demand. We have a round number here, and now we have the price consolidation that we saw on the chart. We're not going to get into this too much on this video. I'll make another one today on this. Excuse me. But I wanted to see how this plays. Now, are there any other zones that we want to identify? Okay, and we come here to our rectangle tool, and we see that we have an area here that price has had its challenges, either accepting or rejecting. Okay, we're going to extend that outward in time, and we also see that we have an area here as well. And you'll see how important these levels are as we advance price forward. You will see how important and how key it is for these levels and how they can be used with a very high degree of probability. Okay, so now we have a zone here. We have three zones that we want to particularly pay attention to. We see that price made an overwhelming new structure low here, so the expectation is a shallow pullback to an area of structure. Price has achieved that once, two, and three times. So, you know, as price negotiates through this area of consolidation, we see that it has a tendency to be bullish. It has new structure highs and higher lows, new structure highs and higher lows. Now this may appear in the short-term order flow to be a new structure low from here, but overall you can see that in the longer-term order flow it does not. It is producing a new structure, a higher low, and from this level here we get a retest. We don't get a break below, close below that. So for all intents and purposes, this structure has not been violated on the longer term order flow. We'll get more into that in the next video. But here we see that price starts to accelerate and pick up momentum. We see that price on the approach here really increases momentum. Now there's an expectation of price. All of these levels are expected to hold, okay, unless price approaches it with momentum. Okay, if we see price acceleration, we see a lot of strength coming into one of these areas, then the expectation is for that area to fail. You know, so that is one thing that we want to be aware of. That is why when we take, if we have a potential pattern to say terminating in this general area, and we see all this strength heading into that, you want to take your time. You want to really assess things. You don't necessarily want to be taking that short because there's too much steam pushing price upward, and that may come and hurt you later on in that trade. So we want to be aware of this. Now this area is expected to fail as we have a dramatic increase in price acceleration and momentum. We have a huge projection here moving forward. So the expectation is not only for this area to fail, but for price to keep going upward. So we expect a higher low. We expect a weak pullback, and then price to potentially make another new structure high and retest the zone up here. That is one expectation that we can have from where price is right now. And as you see, price comes out, does react to this level because it's going to. There's a lot of supply and demand here. So price is going to react to that level, and price continued onward like we expected it to fail. So now we expect once price does find its final turning point, which looks like it may be at its final point here, we also have some other structures here, that we may get a fairly light pullback. And that is an expectation that we have. It is unreasonable to expect that after this much movement that we're going to get a pullback to structure here. No, look across and look for other structures that are, reasonably within the limits of what you would expect as a shallow pullback, and that would be right here somewhere. Okay, and price does come back, shows a little bit of weakness there, and pulls back as expected to an area of structure. Okay, we expect a light pullback, so this may be it. This may be as low as it'll go, and now we could expect a move in the upward direction to test these levels up here. Okay, now I'm going to fatten the chart up a little bit so that we can see this with more detail. And as price comes up, shows a decrease in momentum. As you can see, the angle here in which price came up, momentum, had a shallow pullback, should have seen equal to or slightly greater price acceleration. Why? Because of the weak pullback. Okay, price does not do that. Price showed weakness heading up into this area. So from this price action, we can come up with certain expectations. As you can see, we have one clear swing here, came back and produce another one. So if we copy and paste this area here, we have an expectation of where that should come and terminate. Okay, we can also take, let me not do the F9 because it will stop recording. We can also take measurements of these swings to figure out where areas of confluence are happening. Okay, and we can see that we have between this 138 from a harmonic situation, we have the round number, we have an area of supply and demand, we have the 161. These are a lot of obstacles in this very small area that price has to show some degree of resistance to, and it did so here, came down with strength. Okay, and then price accelerated again. There's a momentum bar here with no rejection, so you would have to wait, okay, until you get a clear indication on a bar by bar, okay, that price is not going to continue climb. Okay, and we get a good bar here. We get a situation where price does not accept higher price action here. We see a little bit of rejection. We see price come down. We see price close around the 50% of this candle here with no rejection. So we see that once we penetrated, we were able to close in the zone. Price rejected that pretty harshly, and although we don't have the volume in this candle that we would like to see here, it's a pretty strong indicator that price rejection and the sellers are entering this market. The next candle comes in, we see some more buying, but nothing close to what was there before. There should be no problem in the bulls being able to carry price higher, and at the very least attempting to trade above this. So this is another indicator that, you know, the bulls are still trying to hang on, but they're not nearly as strong to be able to take price higher. And the next candle confirms what we already suspected, is that, you know, price is going to reject this level and it's going to push on lower. So to answer your question, yes, we did have technical reasons as to why we would go short here. And it's up to us as traders to find the confluence in these zones, in the areas of supply and demand, and use harmonic patterns or harmonic moves, tendencies, and ratios to find that confluence that you see right here that would allow us to take a very high degree of probability trade with the minimum amount of risk. Okay, because if you enter the trade anywhere in this area, okay, your stop would have to have been right above this zone. So you're only risking, you know, about 7 pips or so to make a potential huge run downward. Okay, as we've seen in the past, history tends to repeat itself. We've seen significant and harsh rejections of this area up here. So risking 7 pips for a potential move, extended move downward, is extremely huge. Okay, now let's follow this price on downward, since we already know it's going down, and let's see what we could expect. We could expect a reaction to this zone, right? But we see that we are approaching. See the weakness here on its approach here? Okay, so it's expected to hold right here. We see an increase in momentum to the downside. We see strength hitting this area, right? So of course price is going to slow down here, maybe for a couple of bars or two, but with this much strength, our expectation is this area will fail. So if you're short up here, this is how you evaluate how price is moving and how you evaluate the strength of your position to see whether you should either A, take profit, or B, continue to ride it as long as you possibly can. There's an increased strength, increased momentum here. The bars are also screaming to you, I want to go down. So this area is expected to fail. And sure enough, we get that pause that we expected, and price continues to climb lower. As you can see, now we have to deal with this area right here. And we have here a pause in price, where price starts to move sideways. There's no definitive structure area here. So with this much pause, and we see that price, the buyers are entering the market here, but they're unable to hold on to any kind of higher price action. They're not able to even trade higher. So there's an area of weakness here, but it's not enough to say that price is going to have any sort of significant correction. And if it does, past support becomes new resistance, right? So if anything, we'll get a test probably to this level right here, somewhere around this level right here. We may get a test, and since there's weakness here, it's expected to what? Hold, right? So we see that we have price almost touched that area, unable to hold on to that as expected, and comes on down to test this area right here. Now we see what? Price acceleration again. So what do we expect from this area? Let's project these into the future. Let's project these into the future and see how price reacts to these areas in the future. Okay, so this area is expected to fail. Why? Because we have price acceleration heading into an area of demand. So there's just too much strength here. I expect this area to fail, but you will see some sort of reaction. So you can't let that fool you. You cannot get fooled by a little reaction like this and you see, oh, this is a doji, so the market's going to turn around. This is where the people that trade candlestick patterns fail, and fail miserably. Okay, you have to assess the strength and the weakness of these moves. And now we see that we have an overwhelming area down here of supply and demand. Okay, this is another area that we can identify as price is approaching it. Let's do that now. And we see that we have a huge area here. Okay, that price is approaching with what? Strength, right? So what do we expect from this area? We expect it to fail. And price does exactly that. It fails. Okay, and as we continue to advance price, we see that we have a pullback now. And where do we expect this pullback to go? Into structure. How is this pullback happening? It came back, I came back down to here, price is moving lower now. Now we see price still dancing around. Okay, what are we starting to see here? We're starting to see that loss of momentum. We're starting to see some of that weakness in price being able to push lower. So now we're expecting to get a rather decent pullback. A decent pullback to where? To an area of structure. Is it consistent? Yes, overall we've made a new structure low, so we expect a fairly weak pullback. That weak pullback is likely to be where? Somewhere in an area of structure. Will a pullback to this general area be considered a weak pullback? Yes. Look at the distance that it traveled. Okay, this will be considered a weak pullback and something that we could expect. Okay, and as price comes forward, moves higher, comes right into the zone. Okay, and now where could we expect? We expect price to now either push lower and make a new structure low, which would be an obvious expectation, okay, or that price is not done climbing yet. We may get, in the short-term order flow, some higher price action. Why? Because we're making what? Higher highs and higher lows, higher highs and higher lows. Okay, and here we have another retest here that failed. So now from this area right here and a lower high, we could expect what? A new structure low in the short-term order flow. So what are we expecting? We're expecting a rollover. Now we may be rejoining this longer-term order flow and making that new structure low that we are expecting. Can price do that? Okay, and price, so if you were short here for whatever reason, this is the first obstacle that price has to overcome, right? Our expectation is yes, a very strong move, very weak pullback, that we should get that new structure low. Okay, price is unable to do that. That should start raising a bunch of flags in your mind and have you taking profit early or making sure you're at the very least at a break-even trade. Why? Because price should have had no difficulty in making that new structure low. It was an expectation. Okay, at this point it could still be an expectation, but there has to be all sorts of concern in your mind as a trader because price did not achieve that off of a very weak pullback. This indicated that we were very bearish, and because of that we should have been able to produce with this much momentum a new structure low. We did not do that. So now that we didn't do that, we could expect from here what? A very deep pullback, right? Maybe a retest of these highs. Okay, price had a deep pullback as expected. Now we may get that new structure low that we were anticipating because why? We got a lower high. So we have to be careful here because we're also starting to see what? This bound is starting to what? Drift sideways. So you can't let that fool you. Unless a close below this happens, this move is going, this market is going nowhere but either sideways or up. It cannot go any lower. So that is something that we need to keep in mind. Okay, price retests it a second time. Okay, retests it a third time, breaks finally below. Okay, we see that we have a very weak new structure low. Should that be happening? Is there a loss in momentum here compared to this previous swing? Yes, we're seeing greater weakness here. So that is where you have to be very good about reading that order flow and understand strength and weakness, because although this made a very weak new structure low, we also did what? We did it on weakness. So the expectation here is not only a deep pullback, but a market that's consolidating, that's looking to what? Possibly reverse. Okay, so as this happens, we see what? We see an increase in momentum here. We see a shallow pullback, another increase in momentum. We see a pullback from what? Again, this area of structure. Okay, we see that price is having difficulty here again, but we do see the increase in momentum. Okay, and we have to be aware of that. And we see a very shallow pullback here, and now we see another test up here, and now we see what? Strength. What does this strength mean? What do you expect from this area? We expect it now to possibly fail. So we are not looking for any shorting opportunities here because we are expecting it to fail. And what does it do? It fails. Okay, that is how, and then what happens? We come back to retest, and the market continues on upward. Okay, so And why did it come up here? Why did it come to this level? Because it was the next level that price was going to what? Have difficulties with, right? That was up there. Okay. So once it breaks out of one area, it's expected to travel to the next. Then, depending on how strong or weak that is, and the moment and what's driving price up there, you're going to have a pullback. It happens to weakness because there is weakness here. Why? Because of the look at this momentum and look at this momentum, sharper, right? Increase in volatility, right? What does that mean? Weakness on the pullback, right? Strong new structure high, weak pullback, and so on and so forth. So these things happen and occur over and over and over again. What did this come back to? Almost a structure, right? Look across. Right? Beautiful. Okay. And then it comes back here, tested this area here, but we got too much momentum. It's approaching this with a lot of strength. Where are we pullbacks? What are we expecting this area to do? We expect it to fail. No question. Okay, breakthrough. Let's see how it comes back. Where did it come back to? Structure on weakness. What do we expect it to do? To keep going. This level right here. Okay, I'm not telling you that this works 100% of the time, but it works the majority of the time. Okay, and now we come here and we come to this strength with a lot of strength. So what do we expect it to do? We expect it to fail. What does it do? It fails. Okay, this happens over and over and over again, guys. We open our eyes, we read the information that is in front of us, we jump to no conclusions. There is no guessing here. We have an expectation of what price should do next. Okay, use your areas of supply and demand. Okay, find the confluence with your ratios, with your harmonics, with what's obvious. Don't be too concerned about bat pattern or Gartley pattern or ABCDs. Find the harmonics. Okay, this is harmonics. Okay, find the confluence zones with the ratios. Okay, identify those. Use clear swings, highs and lows, and draw off for those. Your trading is going to improve exponentially. Your profitability is going to increase also, and you're going to know immediately when you're wrong, because if price closes up here with all of this weakness, okay, I'm wrong. Okay, and price with this much weakness here should not be breaking above this now. However, price approaching that, look at the difference. When you approach it with something with strength, what happens? Look what happens when you approach something with weakness. Okay, price is going to tend to follow the path of least resistance. Okay, learn these zones, figure them out. Okay, post examples on the thread. I will help you with them. I'm busy, but I'm trying to make time for you guys. I want you guys to succeed. I want you guys to get better. But learn to use these zones. Use them wisely. Identify the strength and the weakness. Okay? Never trade against strength, and always trade away from weakness. Your trading is going to improve tremendously. I'm going to look for a nice consolidated range-bound market, and I'm going to make a video on that in a few minutes. I hope this was valuable to you. I hope you found value in this. I hope it opened your eyes to how clear this can be, and how easy this can be to identify these zones and to trade them profitably. Like I said, there is no such thing as noise. The market is not random. It is completely, you can completely forecast it and predetermine where these turning points are likely to occur, as you just saw. Thank you very much.